Trading view. Okay. Rename. Yo, yo. I'm going to give everybody a few minutes to hop in here. I hope everyone had a good weekend. A little bit productive, a little bit of fun. Gonna give everybody a few minutes. I'll probably actually get started around 7:40 because I didn't make any posts publicly about that. I want to give everybody a chance. When we go over the analysis from last week, kind of reflect on the new schedule and the state of where we're at navigating this week with the shutdown. And then we'll hop into what I'm expecting for the week. If you have any questions, as always, put them in the chat. If you guys could do me a favor, let me know in the chat that you guys can see and hear me clearly. Okay. Let's see. Where is my chat? Hello, everybody. Just do me a favor. Like I said, I'm gonna get started in a couple of minutes, around 7:40. I'm gonna give everybody a chance to hop in. If you can just let me know in the chat that you guys see my trading view and hear me clearly. Like I said, I'm gonna get started in a couple of minutes. get on to what's gold doing. $31 already. Damn. Pre-weekly. Start with the dollar. To the daily. Alright, I'm gonna get started in 2 minutes. Again, if anybody could just let me know that you guys are hearing me clearly and seeing my screen clearly before we get started, I would greatly appreciate it. I hope everybody had a good weekend. A little bit of leisure, some productivity, reflecting on the week, getting ready for this upcoming week. I'm going to start the recording now. Alright, what is good, gang? Going to be doing a pre-weekly analysis for the upcoming week for the 6th of October through the 10th. Let's start out with the new schedule for the week. This is not going to be on your screen right now. I am going to send a screenshot into the Telegram, but we have no news Monday, Tuesday scheduled, and then the news schedule for really Friday is the only one that's going to be severely impacted with all the tentative releases because of the government shutdown. So as of right now, we have meeting minutes PM on Wednesday. We have AM news with unemployment claims on Thursday, and then AM news with consumer sentiment and inflation expectations at 10 o'clock on Friday. So my interest for the week is really going to be in the tail end of the week. That's not going to say I'm not going to be looking at the charts Monday, Tuesday, Wednesday. Just a reminder, FOMC meetings minutes is not the Fed funds rate decision. This is their bi-monthly meeting in between each Fed funds rate decision to mull over data that they're presented in the month since their last rate decision, and it's not as volatile of a delivery and not anticipated, so it's not going to be a both sides of the range typically get ran type of delivery. So hopping into the dollar. Hopping to the dollar, I wanted this fair value gap to send us higher. I mentioned to you guys on Thursday that I wanted to see it close above this daily fair value gap to then be inverted to take us higher, because these highs still haven't been ran. Now, as soon as I said that it could also cap the range for risk off delivery. That's what we got. We got a rejection from that fair value gap. So until I get a closure above this, I'm kind of in the middle on dollar. I would still prefer us to trade higher into this imbalance before lower prices. But this candle closure and Friday's candle closure coming back into this fair value gap makes me a bit less confident in that happening. So I'm going to put an arrow from our fair value gap here. We're going to delete the old one. And then if we get the closure below, this fair value gap, I'm going to be looking to invert this into the low. So that's how you create if-then statements, right? If I close above this, I want to see this get inverted and then deliver higher. If I don't close above this and we don't invert it, I'll be looking to close below this, invert that, and go lower. Nice and easy. And then if you have any assets you guys want me to look at, like last week, we went over oil and Solana, just throw those into the chat and I'll take a look at those. So moving on from the dollar, let's head over into NASDAQ. And let me clean this up a little bit. This shouldn't be here. Okay, so for NASDAQ, we're really just expanding at the moment. This fair value gap was created, price traded into it. So we could see S&T form at this low, but right now we can logically expect price to simply expand based on a discount that was found on Friday. Let's hop into the hourly. So if same thing as dollar, if price inverts this, I'll be looking for higher initially during the week. If price doesn't invert this, my attention would come into this imbalance. Basically these two imbalances. You have sell side, you have unfilled imbalances. With the last range, this is also a breaker. Price can come down here, sweep out this low, and then give us some bullish delivery. So for now, let's make this here. I'd expect just to see this deliver us higher. On the daily, that instance I showed you of us souping out Friday's low, ideally that would just form a daily wick, and prices close would still respect this imbalance. As far as targets, let's see, can't do it from this chart. Okay. And I'm gonna annotate with comments all the charts that I post, in case anybody doesn't want to rewatch for my comments. I'm gonna post pretty much what I'm narrating in here. Moving on into gold. So last week I expected gold to trade into this down close candle. We didn't quite get into there. We kind of just made a balanced price range and then traded higher. Same thing. I'm simply expecting gold to continue to expand. I would be referencing these projections here, and these projections here. So this 2.5 standard deviation range from this breaker here, this projection range can mean retracement or reversal. I'm not really going to be looking to pick tops in the lower time frame. What I could see is if we come and close below one of these down close candles that forms a swing low, that will give us our breaker, and then we can start looking to target these low resistance liquidity runs. Even though there's a liquidity run here, this is also equal lows to me, and you have unfilled imbalances in this range. I'm not expecting bearish price action currently based on this delivery, but if I do get the instance where we get that bearish print below a previous swing low, then I'll be looking for lower prices into these liquidity pools. For now, I would likely wait until tomorrow's close, Tuesday's close, possibly form another fair value gap to then trade higher. Not much to go over on this chart. Oil. Only going over this because we had analysis on it last week. Last week I had mentioned I wanted to see this swing high delivered to this swing low. That's just simple consolidation, so both sides of the range get taken. Ideally we trade into this imbalance. For me, it's not necessarily required. You don't have really any reversal. To me, this is just forming liquidity before possibly the actual soup to put in the low. So I'd be looking at one of these swing highs to give us what we're looking for to trade lower into that imbalance. Now, there's no imbalance here in this range. This small one here, and a massive volume imbalance. So I'd expect this to get filled at some point during the week, but there's really no points of interest besides using swing highs. So I'd be looking for reversals off of these swing highs. To trade us lower into this. That's going to have to be something I wait to see how the week prints. Moving over into Euro. Euro is kind of in the same spot. I wasn't really looking for Euro to trade into this upper fair value gap, but my analysis here is I haven't been invalidated yet, so I'm going to continue waiting for this to play out. This is still ultimately what I'm looking for. Nice and easy. All right, so GJ was another one I was giving you guys. Price traded and digged slightly beyond this daily SIBI and then traded lower into this liquidity pool that I was annotating. I was looking for this imbalance to get revisited. We missed that slightly. Again, not much to go off here because of how big this gap is. So I'm not going to be posting any interest into this asset right now. Yeah, you have a 200 pip gap up from the weekly open. So that's pretty much, and one other thing was Solana we looked at last week. So Solana, I told you on the weekly chart, I know we were opening way down here last week. I wanted to see the weekly close internal to external. So my draw is still going to be here for Solana. I wanted to see this because we gave the the CSD on Monday. We closed above this down close candle. That should have sent us higher. So I still expect Solana to draw up into this high. Nice and easy. All right, so nice and easy. There's not a lot to go off of at the current moment with delivery, with all the gaps and the uncertainty with the news. So pretty simple. It's going to be a day-to-day basis. When trading all-time highs, I'm simply going to be looking at for consecutive candle expansion. If we get the instance where we get a fair value gap created on one of those assets like NASDAQ and gold, those will be on my chart. If we're trading lower, I'll be looking for one of the assets to draw into those imbalances and then trade higher, unless I saw different signatures that suggested lower pricing at the highs. But for now, I'm just expecting higher prices on risk assets such as NASDAQ, gold, stuff like that. So I'll open it for questions. I know I kind of ran through this. There's really not a whole lot to go off of at these all-time high levels. You're really just going to continue to look for higher prices until we see signatures that suggest otherwise. So if you guys want me to look at anything else for you, throw it in the chat. If you have any questions, anything like that, also throw it in the chat. I know last week, at least for me, right, I had a really good week analysis-wise and a not-so-great week execution-wise. Now, I still came out super green with my trade on gold, but Wednesday and Friday should have been cakewalks, considering I called the low of the week last week. My execution on Wednesday and Friday was just not good. So I'll give you guys a couple minutes. If you want me to look at something, throw it in the chat. If not, we'll wrap it up and move on with our Sundays. No questions, no other assets anybody wants me to look at. Give you another minute. If not, we'll wrap it up. Now it's on EU. The previous month hit the fair value gap. I don't really look at the monthly, simply because those fractals take way too much time to play out. You know, when you're looking at a monthly point of interest, you're looking for a daily sell model, right? Now, if you're also looking at the monthly, right, here's what I see. Right, here's your previous range, and I'm not gonna. Here's your previous range. Your equilibrium point is about here. Price traded to it, built liquidity, souped it, and now is trading higher. Right? If you notice this imbalance, they formed liquidity, trade lower into it, trade higher. Now they're going to do like kind of the same thing, possibly, where they're just going to accumulate and either trade higher or they're going to take out these relative equal lows in the monthly and then trade higher. The dollar is not a strong currency at the moment, and based on what they're doing or what they should be doing with the interest rates, we can infer more dollar weakness, right? So when it comes to risk assets like euro, like Bitcoin, like equities futures, a weaker dollar means those prices will be allowed to move higher. But I really don't look at monthly points of interest because they simply take too long to play out. So like the weekly is pretty much as high as I would go, and then from there I would just be looking at this. Yeah, so 2.5 reached, range high hit. Now we can seek internal. That's why I annotated these low resistance liquidity lows on the daily. Trade back into this order block, fair value gap, whatever you want to call it, or whichever one you want to use, to then take us higher. But yeah, the dollar is not going to be the relative strength leading asset that we've seen over the past, say, 4 or 5 years based on the interest rate and bond market. Also, I believe Trump is intentionally trying to devalue the dollar to try to manage our national debt more reasonably. I think that's also done deliberately. But Martin, when you're looking at monthly points of interest, right? The fractally aligned time frame for the monthly is the daily. So when you're trading into a monthly area of interest, I wouldn't be looking for that monthly point of interest to be guiding price, or that point of interest being used in price, until you saw daily time frame signatures that it wants to respect and move in that direction. And then you can take that daily buy or sell model, in this case sell model, if I was on EU, and you can try to engage on the hourly. Any other questions? Just look at the monthly, beginning of a new month, and then we start with the day. Yeah, so that's good. If I ever use the monthly, it's actually more towards monthly closes. I'll try to use that as in to find out where I want price to logically close. If I'm looking for a turning point on the monthly, I'd expect a bearish or bullish array to be respected, and the lower time frame should start drawing towards the close of the candle. That's how I use the monthly most commonly. More so at the end of the month to see where I want to have the monthly candle close. But yeah, whatever your process is, just stick to it. Repeatable approach delivers repeatable results. But thank you for the question. Anybody else before I hop off? Any other assets, any other questions about anything I said? our gang, that is gonna wrap it up for us today. I will post the charts and some notes for each of them in the Telegram. For most of them, it's just continue to go up in risk until we see signs of otherwise. So I will talk to you guys in the Telegram later tonight with the charts, and then tomorrow and on a daily basis for the rest of the week. But you guys enjoy the rest of your Sunday evening. Thank you guys for taking the time to hop in here, and let's crush